Someone asked me about this stock called Strategy. So what caught the eyes of investors? The founder, Michael Saylor, he was a big supporter for Bitcoin and a key thought leader in the crypto community. He transformed from primarily a business intelligence software company into what is called a Bitcoin treasury company. So what is a Bitcoin treasury company? Basically, the major portion of its total assets is now Bitcoin holdings. And the company now owns 3% of the total supply of Bitcoins. So if the price of Bitcoin goes up, the value of the assets will now be worth more money. So the first and most basic question investor will ask, where did Strategy get the money from to buy Bitcoin? So if you're a beginner and you want to develop an X-ray eyes to find the answers, here's what you can do to take your first step. Look at the company's balance sheet. It is a financial statement that shows these three things. Assets, which is what you own, liabilities, which is what you owe, equity, which is what is left or retained in the company. A company gets its capital from primarily two sources. One, it is the money that is earned and retained over time, which is called the equity, and two, money it has borrowed from others, which is called debts. Understanding this mix between the debt and the equity reveals about the company's fundamental and financial risk. So if the company is heavily dependent or reliant on debt, it can bring a lot of instability as well as putting a lot of pressure on their cash flow. But if the company earns its equity through the profits, it will have more resilience or buffer when crisis happens. So here is the balance sheet of Strategy. We can compare the retained earnings versus the debt. Initially, as a software company, the business is not that profitable, hence, and that's why the retained earnings is negative. As they transited into Bitcoin, and when Bitcoin falls back in 2022, it was below its average cost price. The retained earnings becomes negative, and only recently, when Bitcoin prices surge a lot, the retained earnings is now positive. Looking at this picture, do you think it is stable? And since debt is getting higher and higher over time, Strategy will eventually have to pay back its debt. So here's a quick tip to check. We use this ratio called current ratio. So what is current ratio? Current ratio compares the current asset versus the current liability. So the word current means that it's within a year, and current assets, you are looking at assets which are liquid like cash in the business. And for current liability, it is usually the loan and the interest that is due this year. So for current ratio, if we want a healthy ratio, we'll be looking at 1.2 to about 1.5 times. Because if the current asset is more than the current liability, it gives the company buffer should the interest rate rise, should the interest becomes more. So where can you find this info? Head over to Fiscal AI, key in the ticker symbol MSTR, head over to the financials, and I want you to click on the ratios. Next, check out the financial health. Scroll all the way to the bottom and you will see the financial health. Click on it and that's where you get current ratio. So with a current ratio of 0.7 times, which is much lower than 1.2 to 1.5 times, currently it tells us that Strategy's current liability is much higher than its current asset. Let me know what do you think the management will do to pay off this debt. Share with me in the comments.